This is problem 1-4A. It's on page 37 in your book. I'm going to go through these in a Word document for you. What I'd like to do is also just remind you that when I'm doing these, I'm not going to be running the balances each time. I'm just going to assume that when you get to this in Cengage that you'll remember that for every other transaction you're going to have to bring a balance forward. So if you're ready, I'm just going to make this as big as I can. Okay, so we're ready here on transaction A. Looking at the assets, this time we have 5. We have cash, we have accounts receivable. Accounts receivable is used when a company allows customers to buy on account. Prepaid insurance is when you're buying insurance for more than 1 month at a time. They have a truck, and they also have equipment. Accounts payable is when the business buys on account. Here's the owner's capital account, which is used for investments. Drawing is used when the owner takes out money or goods for personal use. Here's a column for the revenue that records the sales of the company and the expenses. And remember, at all time, assets must equal liabilities plus owner's equity. And owner's equity is split out over 4 accounts: capital, drawing, revenue, and expenses. When we get into chapter 5, at the end of every fiscal period, drawing, revenue, and expenses will be closed into capital, so you get a fresh start every month. Okay, here we go. Transaction A. In transaction A, Gervais deposited $25,000 in a bank account in the name of the business. So the cash is going from 0 to 25,000. So this is going up. And because the owner is making an investment in the company, capital also is going up. As you look at the transaction, the left-hand side of the equation equals the right-hand side of the equations. Looking at letter B, we bought a truck from Kelly Motors for $26,329. We paid $8,000 in cash and placed the balance on account. We wrote a check number 500. Anytime you write a check, your cash will be going down. In this case, it's going down by $8,000. So here's a minus $8,000 to cash. The value of the truck is $26,329. So this account is going up by that amount. So we have 2 things on the left side of the equation. The net effect is the difference between these 2. So when we look over here to see how much we still owe on this truck, when we owe something, it goes into accounts payable, and the difference between how much it was worth versus our down payment is how much we still owe. So we have an increase of $18,329 to our liability account, accounts payable. And again, if you subtracted $8,000 from $26,329, you would come up with $18,329 increase to the left side of the equation. And letter C, we bought catering equipment on account for $3,795. So we're going to the equipment account, and that's going to be an increase to that account. And because it says we bought it on account, it goes into accounts payable, and now we owe even more money, so this account is growing larger, so it's a plus to that side. So left side is increased, right side is increased by the same amount. Looking at letter D, we paid the rent for the month, $1,255 to rent expense, wrote a check. So in letter D, we wrote a check. Our cash is going down by $1,255. And this is for an expense. So we're going to go over to the expense column. Expenses go up. Okay? So we're going to go over to the expenses. It's going to be a plus $1,255, and we're going to label it rent. And anything in the expense column is subtracted from the right side of the equation. So we have a minus $1,255 on the left side, and this will be a minus $1,255 from the right side of the equation. So we're in balance. In letter E, we bought insurance for the truck for 1 year, $400, writing a check, so our cash is going down. And we bought insurance. Now this is definitely prepaid. It's not buying it for a month, it's buying it for a year. So here's prepaid insurance going up. Looking at letter F, we sold catering services for cash for the first half of the month. So we produced revenue here. Our cash is going to be going up because we made a cash sale. Also, our revenue is going to go up. So we're going to go over to the revenue account and put a plus by that. Looking at letter G, we bought supplies for cash. We wrote a check. When you write a check, when you're spending money, your cash is going to go down. And supplies is an expense. Remember, expenses go up. So here we are having supplies account go up by $185. And remember, this is a minus over here. And anything in the expense column is a minus from the right side of the equation. So we're in balance. Looking at letter H. In letter H, we sold catering services on account. So we produced income in letter H, but they did not pay us cash. Now in letter F, we had cash sales. So cash went up and revenue went up. But in letter H, they did not give us money yet. So customers owe us money. So it goes into accounts receivable as a plus. And revenue will go up. Okay. Looking at letter I, we received and paid the heating bill for $248. We wrote a check. So write a check means your cash is going down by $248 and our expense is going up by the same amount. And remember that an expense will be subtracted from the right side of the equation. Looking at letter J. In letter J, we received a bill from GC Gas and Lube for gas and oil for the truck, $128. Now we received the bill. It does not say anything about us paying us or writing a check. So our expense is going up, but because we haven't paid it yet, we have to pay it later. That's going to go into accounts payable as an increase. So in this case, in letter J, there's no activity on the left side of the equation, but on this side, on the right side, there's a plus to accounts payable and a plus to expenses. But remember, this is a plus to the right side of the equation. This is a minus to the right side of the equation, so it comes out a wash, so we're still in balance. Looking at letter K, we sold catering services for cash. So here's another sale. This time it's a cash sale. So our cash is going up and our revenue is going up. Plus here, plus here. We're in balance. Looking at L, the owner withdrew cash for personal use. They wrote a check. So in L, we're writing a check and our cash is going down. Now also in this case, the owner is taking out something for personal use. And when the owner takes out something for personal use, it has to go in the drawing column. So I'm going to go down to that line. And notice that drawing was 0 up to this point, and now it's going from 0 to 1550. So this means it is going up. So it's a plus 1550. So if you look over here, there's a minus to cash, minus from the left side of the equation. When you look over here, the account itself is getting bigger, but drawing is a minus from the right side of the equation. So we're still in balance. Looking at letter M, we paid the salary of the assistant, $1,150. We wrote a check, so cash is going down. So that's a minus. And this is an expense, so our expense is going up. It's a plus to the account, but it's a minus to the right side of the equation. At this point, you would have now your running balance, and so if I were to go here add up all of these, we would have a balance in cash of $17,873, and we would have accounts receivable of $4,307. We would have prepaid insurance of $400. We would have truck for $26,329, and we would have equipment with a balance of $3,795. If you add up all of these 5 assets, you would come up with a total of $52,704. This is all of your assets. If you go over to accounts payable and get your balance, there should be a balance of $22,252, which is what you owe. When you go to the next one, which is your capital, you're going to have a balance of $25,000. When you go to your drawing, you're going to have a balance of $1,550. Your revenue is going to have a balance of $9,968, and the total expenses will be $2,966. Okay, so on this side we're going to take the liabilities plus the capital minus the drawing plus the revenue and minus the expenses. And if you do that, you're going to come up with $52,704. And notice that it matches what you have over here. So $52,704 on the left side of the equation, $52,704 on the right side of the equation. And that concludes this one.